morning. This is Horizon's Middle East and Africa. Our top stories this morning. Throwing in the kitchen sink. U.S. President Donald Trump announces a 100% duty on branded or patented pharmaceuticals, as well as new levies targeting heavy trucks, kitchen cabinets, and bathroom vanities. The president is also advancing plans for American investors to buy TikTok's U.S. operations from ByteDance, valuing the unit at $14 billion. And a White House meeting. Trump urges Recep Tayyip Erdogan to halt purchases of Russian oil while leaving the door open to Turkey obtaining F-35 fighter jets, saying he wants something in return. Well, it's just gone 8 a.m. across the Emirates. I'm Jumoke in Dubai. Well, most definitely Trump wants something in return vis-a-vis not just Turkey, but in relation to everything. We walked in this morning, another round of tariffs yet to be imposed by the U.S., this time on pharmaceuticals, on kitchen cabinets, on sinks, on heavy trucks. So yes, tariffs back on the agenda, very much in focus today. And it's really setting the tone for the handover from Asia. We'll talk about that in a moment. But some of the pharma-linked companies are struggling today in trade. And not just that, with the handover from Wall Street yesterday also pretty negative as well. You had a pullback for the Magnificent Seven to the tune of about 1%. So S&P trading in the red the week. On a weekly basis, it's actually tracking losses now. So yes, very close to those all-time record highs, but stabilizing. We're seeing some consolidation at this point. Today, S&P futures trading sideways, marginally weaker, but still the actual cash index around 6,600, 700 has been that range. Bloomberg USD slipping a little bit, though the tone of the last couple of days has been one of strength. We had really strong U.S. GDP data. I'm going to show you a chart in a second. Initial claims also surprising to the downside, so sort of alleviating some concerns about the weakness of the U.S. economy. That has given a bid for the USD. 10-year yields also moved upwards after that stronger than expected U.S. GDP data, up 3 basis points. Attention today moves to the PCE figures, and the expectation is core PCE will probably hold on an annual basis around that 2.9% level. But listen to that number, 2.9%. It's still way above 2%, which is where the Fed targets. And then Brent, take a look at this, just below $70, $69.50. We are actually on track for a weekly gain for oil, heading for its biggest weekly gain in more than 3 months. Why? Because investors are keeping an eye on the geopolitical situation, the fact that Trump seems to be turning tougher on Russia and Ukraine have been targeting energy infrastructure. So all that is being factored in. Let's switch over. I just want to show you pictorially what happens with that GDP print yesterday in the U.S. And you can see the big jump upwards, 3.8% upward revision to second quarter GDP, indicating that the U.S., at least in the second quarter of this year, very, very, very far away from recession territory, which is what everyone was concerned about. So the U.S. growth recovery has been strong. U.S. spending was also holding up as well. So something to bear in mind. Okay, let's check in now on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. Lots going on there, Min Min, but maybe just give us a picture of how all of these indices are reacting to the latest pronouncements out of Trump.
Yes, Joanna, as you can see, a sea of red behind me. It's risk-off across Asia. As you said, there is the better-than-expected data out of the U.S., the Fed discussions there, higher borrowing costs in the U.S. That is a headwind for some of these tech-heavy indexes here. So you can see Kospi leading the declines here, 2.7% down. The TAIEX as well, Hang Seng also off by about 0.7%. But, of course, the big news today is the tariffs coming out of the Trump administration, right, on things like pharmaceuticals, on furniture, kitchen equipment, and so on. So here you can see some of the pharma stocks here really badly hit, off by about 5% or so for Sumitomo Nippon. And a lot of it is a knee-jerk reaction because analysts are saying that it's actually quite hard at this point to pinpoint which companies are going to be directly affected because it's 100% tariffs on companies that sell patented or branded products in the U.S. with carve-outs for companies that are building manufacturing plants in the U.S. And for many Chinese and even Japanese companies, a lot of them that do sell in the U.S., they do have partnerships with local companies or have manufacturing plants there. But certainly a knee-jerk reaction here, and also doesn't help that biopharmas in China has been some of the best performing sectors in China so far this year. So it's a temptation there to take some profits off, regardless of whether or not they will be directly affected. But flip the board, we're taking a look at the yen as well, because we have the CPI data out today. 2.5% is the headline CPI from Tokyo, which is far below estimates of 2.8%. So we can see the dollar-yen coming off a little bit, but still hovering close to 150. Of course, the implications here is what does it mean for a BOJ rate hike in October? Jumana.
Yeah, most definitely. And if they actually will go along with it. Min Lo in Hong Kong, thank you so much for the overview. Okay, to our top story now. The Trump administration has announced new tariffs on a wide range of products, including pharmaceuticals. Let's bring in Bloomberg East Asia government editor John Herskovits. So another round of tariffs, this time on branded pharma, as we understand, on kitchen sinks, vanity cabinets, a whole range of products basically suited for the bathroom and the kitchen, and also heavy trucks as well. What do we make of these latest announcements?
Yeah, we haven't seen these sectoral tariffs in a while, and they're for, as you say, a wide range of things. The heavy trucks, the pharma, the patented pharma is probably the biggest in terms of value, but it also has this huge carve-out that allows for for companies that have plants in the U.S. to avoid these 100% tariffs. The 25% on heavy trucks are designed to help protect the U.S. industries. And we've also seen tariffs on upholstered furniture, kitchen cabinets, and bathroom vanities. Some of these companies have been hit in trading today. How hard they hit, we really don't know. But it is, a really broad array of tariffs that are coming, and the biggest concern is how this is going to hit patent pharma. And for the most part, a lot of these firms do have plants under construction, partners in the U.S., which should allow them to avoid the 100% tariffs.
Yeah, our Bloomberg Economics team put out a note this morning suggesting that if these tariffs actually go through, it could end up adding around 3.3 percentage points to the overall tariff rate. So it's not insignificant. These are quite big numbers if they fully go through. But as you mentioned, they're always carve-out, so it's unclear. Also, John, I want to ask you about the latest on the TikTok deal. It seems like more details have emerged overnight about the contours of the framework vis-a-vis ByteDown selling down their sale of the TikTok U.S. unit. What do we know?
Yeah, so we have the value of $14 billion for this. The ByteDown share would be under 20%, and there would be protections in place to safeguard the data of American users. Oracle is one of the companies that's been listed as a possible investor in this. So we have more terms of how this is going to work out, some monetary figures, and also market share. So one thing to keep in mind is that Trump is looking to have a meeting with President Xi Jinping next month at the APEC summit in South Korea. So I think we may see a bit of a cooling in ties, in the trade friction between the U.S. and China before then. A lot is on the table. This meeting's high stakes for both of them. And this TikTok deal, it just shows that things are moving forward on one of the more contentious issues between the U.S. and China.
Yeah. John, thank you so much. Bloomberg East Asia government editor John Herskovits. By the way, while you were speaking, a headline has just come through from the Wall Street Journal saying the Trump administration is also weighing plans to cut semiconductor imports. The U.S. plan would need equal number of domestic chips as imported. This is being reported by the Wall Street Journal. But again, another interesting step being considered by the Trump administration, this time in the name of increasing their chip sovereignty, which has been obviously a big focus for the Trump administration. The details around this still unclear, but again, could have negative ramifications on some of the manufacturers of those chips, especially around Asia. TSMC is one that comes to mind. So we're going to keep a close eye on that as well. Okay, investors are turning their focus to Friday's inflation data today, with the Fed's preferred gauge of underlying inflation likely growing at a slower pace last month. Joining us is Samy, Chaar, Chief Economist and CIO Switzerland at Lombard Odier. Well, great to have a voice from Switzerland today, given the new pharmaceutical tariffs. I think I'm going to start with that. It's not been good for Switzerland the last couple of months with all of these pronouncements coming out of the Trump administration. How are you reading the latest move on pharmaceutical tariffs?
So it's true, we had special treatment in Switzerland, so for once we're on top of the list.
Yeah, not in a good way.
Not in a good way. When it comes to pharma, it's finally happening. This is a risk that was hovering ahead of Switzerland. Now it's happening, and it's going to force companies to negotiate. It's pretty clear that the 100% tariffs, in our view, are not bound to stay. It's pretty clear that the Swiss companies and some other European companies are doing what is necessary to have a presence in the US, eventually negotiate with the US administration, and basically be exempted from these tariffs.
Yeah.
So we're moving forward into this risk. Sectorial tariffs were there. They were weighing on the sector. They were weighing on Swiss stocks as well. The idea that we can accelerate the agenda and eventually move to an environment where some of these companies do what is necessary to be exempted could eventually allow the sector to start doing a little bit better in the coming months.
Okay, so that's a micro level. Let's talk about the macro level. So you heard me speaking to my colleague earlier about our own instant, knee-jerk reaction. Bloomberg Economics think that these tariffs could add another 3.3 percentage points to the overall tariff rate in the U.S. So far, we are not seeing these tariffs show up in a meaningful fashion on inflation. Do you think that's about to change?
So we're not completely there yet. If you take the average effective tariff rate that economic agents are currently paying, we're still slightly above 10%.
Yeah.
And we know we're going to go to somewhere between 15 and 20.
Correct.
And obviously the addition of pharma could lead that to be even higher. So we're not completely there yet. We can't say that we've seen the worst when it comes from tariffs, right? The impact is still going to happen in a harsher way. Now, when you look at higher frequency data, when you look at the inflation reports, it is nonetheless showing, right? It's just that there is something else that is happening in the meantime, which is that services inflation was coming down. So you had goods inflation, imported inflation coming up, which is the impact of tariffs. But in the meantime, wages, services is basically deflating or disinflating, which means that the overall inflation rate in the US remains around 3%.
So, we've been talking a lot about what could go wrong, right? Given valuations are quite, I don't want to say extreme, but high in the U.S. Credit spreads very tight. Everything seems to be great if you look at financial assets. Maybe the risk is staring at us in the face, and that is a re-acceleration of the U.S. economy and the fact that, inflation actually might start ticking up again in an environment where the Fed have started committing to cutting interest rates.
It's true that there's a conflict between domestic demand in the U.S. that is holding up well, but nonetheless, you still have anxiety and weakness in the labor market. You still have relatively high inflation, which is eating into real incomes. And obviously, you have these uncertainty around tariffs. And again, interest rate sensitive sectors are still suffering, like housing. So how do you resolve this conflict? Perhaps the labor market in the US is going to reaccelerate. There are deportations, it might create scarcity, and in the end we might see wages reaccelerate, creating domestic inflation. And there we'll be in an overheating economy, right, which is the scenario that you've depicted. So it's all about the labor market in the US.
Yeah.
In our view, the weakness is still there.
Yeah.
We fail to see that labor market significantly reaccelerate, which would give credit to the idea that domestic demand is going to remain super strong. So I'm absolutely paranoid about the state of the labor market in the US.
Okay.
For now, it's still giving me a moderate signal so that reacceleration of the US economy would not be my base case.
So S&P, NASDAQ sort of stabilizing around these levels. Do you still want to be long here? Are you overweight U.S. equities, or do you think it's right to take a breather, to take a pause?
So we're part of the rotation. We've been selling a little bit of U.S. equities, selling a little bit of U.S. tech. The idea is to broaden the portfolio. So we've been buying European stocks. We've mainly been buying emerging market stocks benefiting from...
Where in emerging markets?
Mainly Asia. So we like the story there. Contained commodity prices, contained energy prices, falling dollar, a growth differential that's relatively favorable. So we like the story there. And the idea for us is we don't want to sell equities, but as you've said, tech is pretty expensive, US is pretty expensive. So we're looking for segments of the market that are a little bit cheaper. You know what? Maybe pharma maybe European pharma and Swiss pharma could be a place where we'd be looking to subtract a little bit of value.
Anti-consensus, pretty bold call on the day that the Trump administration announces these pharma tariffs. You say, okay, this is an opportunity to buy. I'll have to hold you to that.
At the moment,
next
that's
time
going to be the case.
Final question, very quickly. Do you see value in the AI tech trade in China?
Yes, and what we're seeing now is basically if the US no longer commit to exporting chips to China, China's going to develop its own, right? So you choose between selling chips to China and create a dependency, or basically forcing them into autonomy. And it's pretty clear that the Chinese are going to go through this path of autonomy. They're going to do the necessary investment. They're going to try to do the catch-up. So absolutely on that front, we're going to have to count with China for now.
Yeah, Samy, so good to chat to you. It's really nice to have you actually in the studio instead of on a Zoom very early in the morning for you. Samy Chaar, Chief Economist and CIO Switzerland at Lombard Odier. All right, coming up, U.S. President Donald Trump meets with Turkey's Recep Tayyip Erdogan at the White House as the two NATO members look to mend their strained relationship. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumoke in Dubai. Well, Turkish Airlines has just said that it has decided to order 75 Boeing aircrafts, also adding that negotiations for 150 Boeing jets completed, and the order will be subject to talks with the CFM. The U.S. President Donald Trump has pressed Turkish President Recep Tayyip Erdogan to stop buying oil from Russia. And during their sit-down at the White House, Trump left the door open to Ankara obtaining F-35 fighter jets, saying Turkey must do something for the U.S. in return. Let's now bring in on our end Bloomberg's managing editor for Middle East and North Africa. Yesterday, we were previewing this meeting between Presidents Erdogan and Trump, the first time Erdogan actually meets with Trump in the Oval Office in 6 years, the possibility of deals. And of course, just now, we've got this news that Turkish Airlines have decided to order 75 Boeing aircraft. What else did we learn from that meeting, and how significant is it that Turkey are now making this order for the Boeing aircraft?
Well, this order that you just mentioned is the first clear proof that the meeting was transactional, just like we expected it to be. Turkey is looking for a major purchase of aircraft and other defensive equipment from the U.S. and was hoping that this meeting would turn around the relationship. Now, right after the meeting, both Trump and Erdogan, well, Erdogan actually kept quiet, and Trump was very cryptic. He just said it was a conclusive meeting and that the deals or agreements would be announced later. So the first deal that has been announced is this one.
Yeah.
It also shows that, well, it's a sign that Trump, just like he suggested after the meeting, may have gotten quite a bit of what he wanted. He urged the Turkish president to stop buying crude oil from Russia, said Turkey has alternatives, which is true. And he also said that he believes Erdogan is going to do the right thing, is going to do something for Russia. Again, very cryptic comments, but suggests that he asked Erdogan to do more, to side with NATO allies, stop buying Russian crude oil from Russia, and in return, he dangles the possibility of letting Turkey back into the F-35 program, the stealth jet program, and possibly purchasing some of those jets, which is what Turkey wanted to do. So very transactional meeting.
Yeah.
Looks like it was very conclusive, as suggested by Trump, but we're yet to see the full scale of deals that they have clinched yesterday's meeting.
I mean, he quite literally said, I need to get something back in return. So, and then we get this headline of the 75 Boeing jets.
Yeah.
On a more serious note, he also said, this is verbatim from President Trump, I am not allowing Israel to annex the West Bank. There's been enough. It's time to stop now. How should we read these remarks out of President Trump?
Very significant. Obviously, we knew well, it was reported that Trump had told some leaders from the Arab Middle East Gulf earlier this week, as well as Erdogan, that he would not let Israel to annex the West Bank. But this is the first time he's saying it on record. And it shows that he is sort of throwing his weight on this very important discussion, which began a few weeks ago. The talks about West Bank annexation began in Israel. We wrote about it. We reported it in great detail. But this is the first time that the U.S. has kind of drawn a red line that is very similar to the stance of the countries in the Middle East, especially the United Arab Emirates. So yes, it is very significant, and it says a lot, right? When Trump says no annexation of the West Bank, it does carry a political weight for Netanyahu.
Yeah, especially ahead of the Israel address to the UN General Assembly today. So we'll see how the setup is. Huge week in terms of many states around the world also recognizing Palestinian statehood. Anwar Ant, thank you so much, Bloomberg's managing editor for Middle East and North Africa. Now for a look at some of the other stories we're following. Microsoft has disabled some use of its software by the Israeli military after an investigation spurred by news reports that the company's products were involved in the surveillance of civilians. The world's largest software maker has faced protests by employees and media scrutiny over concerns its software is being used to harm civilians in Gaza. Microsoft's decision to terminate specified Israeli Ministry of Defense subscriptions and services was announced by Microsoft president in a blog post and cited the company's rules against using its products for mass surveillance of civilians. Former French President Nicolas Sarkozy has been handed a jail term for a criminal conspiracy at a trial over allegations that aides and political allies covertly sought funding from the late Muammar Gaddafi's regime. Sarkozy was cleared of charges of embezzlement of Libyan funds, corruption, and illegal campaign financing, but judges decided his pledge to appeal would not lift the execution of the sentence. He denies wrongdoing and called his sentence a humiliation for France. Naspers, a South African internet and technology investor, is actively seeking potential investments in artificial intelligence. In a discussion with Bloomberg's Jan Zabazaja, CEO Futi Mahanyele Dabangwa explained that the company is investing in AI to fuel its strategic growth initiatives.
We are focused on ensuring that we can continue to deliver significant results for our shareholders and also for all of our stakeholders.
Does that mean more investments potentially into innovation and AI tools?
100%. So we have our ventures team who are looking at a number of investments worldwide focused on AI in order to support our ecosystems worldwide.
Nigeria's trade minister has told Bloomberg the country will continue to support the private sector and trade with the United States despite the imposition of tariffs. Jumoke Oduwole told Chief Africa correspondent Jennifer Zabazaja that collaboration between Nigerian and American businesses remains strong.
The U.S. relationship with Nigeria is a very long one. It's a strategic one. There's really not a problem from our end. The U.S. has the right to review its tariffs. Nigerian businesses and U.S. businesses continue to trade and collaborate. That's why our commercial investment partnership is doing so well. We started it off in June with our colleagues and counterparts. We have 3 sections: agribusiness, tech, and we continue to just make sure that we support private sector as G2G to trade, which is what we're really interested in. We're open for business.
Do you think we'll continue to see some growth, though, in some of these sectors that have, I mean, if we take a look at non-oil sectors, where do you see potentially Nigeria making some headway in terms of growth and actually being a dominant player if we talk about the global industry and global sectors?
Jennifer, that is an excellent question. The first thing will be services. Our GDP is already over 50% services. Nigeria's tech sector in particular, when you look at the unicorns across the continent, about over 50% of them are of Nigerian extraction. Yeah. How do we make sure that that is domiciled within the Nigerian economy? How do we make sure that services, tech-enabled businesses, which is where our young people thrive, and you know our population is over 70% young people under the age of 30, they're tech natives, they have so many innovative, creative businesses that are tech-enabled, so whether it's agri-tech, edutech, health tech, of course we're global leaders in fintech, we're supporting that space. So that space is growing quite rapidly. Agriculture, agribusiness, there's no getting away from it when you look at the Nigerian economy. That's where we're agrarian, and so the multiplier effect is so huge across rural and urban areas. So how do you lead that into scale? How do you use technology? So we have, like, for instance, with Afrexim, we have the trading company. So now making sure that there's less spoilage and aggregating produce from farm and taking them across the continent to where food is required in country and across the continent. So innovations like that, creative space, that's another area. Afrobeat, Nollywood, our food, our fashion. Almost everyone has complimented my dress as I walked in here. It's proudly Nigerian. And so these are how Nigeria turns up on the global stage.
That was Jumoke Oduwole, Nigeria's trade minister. And a look at markets ahead of that important PCE print that's coming later today. S&P futures unchanged, though we saw a pullback for Wall Street yesterday. Nasdaq also trading sideways. Magnificent 7 stocks ended the session yesterday down 1%. European markets leaning to the green. Now coming up, big tech and AI in focus as investors continue riding the hype. Rami Sarafa of Cordoba Advisory Partners joins us live for his insights. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. Throwing in the kitchen sink, U.S. President Donald Trump announces a 100% duty on branded or patented pharmaceuticals, as well as new levies targeting heavy trucks, kitchen cabinets, and bathroom vanities. The president is also advancing plans for American investors to buy TikTok's U.S. operations from ByteDance, valuing the unit at $14 billion. And driving future, Baidu's robotaxis granted 50 autonomous driving test licenses in Dubai as the company explores global expansion. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Dubai. Well, a lot to contend with in terms of U.S. data that's been dropping. Stronger than expected U.S. GDP yesterday, lower than expected initial claims. That was the setup. You saw a pullback in Wall Street equities pulling away from those all-time record highs. For the week, S&P actually now tracking losses. Magnificent 7 yesterday, also pulling back 1% in trading. And today, the focus is going to be on that PCE numbers. We're going to be watching out for that core PCE year-on-year expectations that we're going to come in at 2.9%. So still way above where the Fed would like to see it, and perhaps a sign that some inflationary pressures are emerging, or at least inflation continues to be quite sticky. So all of that has meant that traders have started to unprice some of the cuts that had been priced in for the rest of the year. There's now about 40 basis points cumulative by the end of 2025. S&P futures trading sideways. The U.S. dollar is slipping a little bit in trade, though yesterday they did get a bid. It did get a bid after the GDP numbers came through. 10-year yields about 3-4 basis points higher today on the session as well. So some uplift in yields. And then Brent, you can see just shy of $70, up about 0.2%, actually on track for its biggest weekly gain in more than 3 months. And here, investors keeping a close eye on President Trump's rhetoric towards Russia and the fact that also NATO allies also seem to be hardening their stance as well, with all of those incursions, the drone incursions over multiple European nations with threats to shoot them down. So all of that not great for the geopolitical picture and adding some premium to energy complex. Switching over, U.S. GDP, the numbers that came through yesterday, again, a big surprise to the upside. And you can see that in that column, the last column, it's going to come up in a moment, suggesting that, yeah, it's an anomaly relative to the prior quarters of the year. 3.8% annualized for second quarter GDP, and really just speaks to how strongly the U.S. economy is doing, despite many concerned about the outlook, the uncertainties, the impact of tariffs and so forth. But actually, those GDP figures for the second quarter were quite robust. Okay, let's check in on how markets in Asia are faring. Min Lo is in our Hong Kong studio. Min.
Joanna, you mentioned the unpricing of the Fed cuts, the rise in Treasury yields and borrowing costs. That's putting a dampener on the tech-heavy indexes in Asia. Look at the Kospi, leading declines here, down by 3%. TAIEX as well, off by about 2%. And the big news today is the bevy of tariffs coming from the Trump administration on things like furniture, kitchen equipment, but by far the most affected are pharmaceuticals, 100% on patented or branded products. And flip the board, you can see the impact on some of these pharma names across Japan, Korea, and China as well. Although for Chinese farmers, very few of them actually have the license to sell in the U.S. Many of those that do have partnerships with local firms, and there is that carve-out for companies that do have manufacturing capabilities in the U.S. as well. And flip the board, we're taking a look at Japanese markets in particular, and you can see that the topics is still just treading water, certainly doing much better better than some of the other regional benchmarks, and it's really protected by the exchange rate there. Dollar yen at about 150. That's partly because of the CPI, the Tokyo CPI that came out today, 2.5%, far below analyst estimates of 2.8%. And some are saying this is going to make it harder for the BOJ to hike rates in October. And so we're seeing that protectiveness coming over for the topics and the Nikkei as well.
Min Lo in Hong Kong, thank you so much. Technology firms are striking blockbuster debt deals at the fastest pace in years to pay for their AI ambitions, taking advantage of investor appetite to lock in financing for initiatives. Joining us now is Rami Sarafa, CEO of Cordoba Advisory Partners. Really good to have you with us, Rami, in studio. I want to pick up on this AI theme, and it really does feel like that there's a tale of two economies going on in the U.S. right now, but AI is a theme, U.S. everywhere. Everyone wants a nibble of it in some shape or format.
Indeed.
And one of the big reports that came out this week that really stood out to me was the fact that Alibaba said that they were committing to spend more on AI without actually telling us what those numbers were. And on the back of that, that stock rallied 6-7% just in one day. What does this tell you about what investors want to see? Is it enough to pledge that you're investing in capex for people to buy into your stock at this point?
Thanks for having me, Jumana. That's a great question. I think that there's definitely a tale of two markets right now. The broad market has an earnings yield of around 4% currently, which means when you compare that to a 10-year treasury at 4.1, means investors are seeking stocks that have higher growth potential.
Yeah.
And what better than AI?
Yeah.
So the market thus far has been rewarding AI names very handsomely. Recently, Alibaba with a massive rally in Chinese tech, up almost 40% since February.
Yeah. Okay. So what also is happening is it's hitting all parts of the markets, right? You had these huge fundraising requirements, and you've seen Meta tap into the likes of private equity funds to get into financing. You've seen Oracle come to the market with a $17 billion bond issuance this week. If this all starts to slow down, isn't it going to have broader ramifications, possibly systemic ramifications, now that all asset classes are involved?
Yes, I mean, I think that the AI fervor, as you said, is not limited to just public stocks. It's actually started seeping into credit markets, capital flows into private markets. This year alone, I think 25% of the deals within M&A are within the AI generative space specifically. So that shows you that that's really what's propelling a lot of the activity. Now, that being said, so far we've seen really strong earnings from companies that have invested handsomely in AI. Mm-hmm. You have NVIDIA, Oracle, Palantir up 100% year to date. And so far, investors believe that CapEx spending is justified and will be rewarded in the future.
Yeah.
For us, what we're actually excited about is the shift to the application layer of AI. So historically, the chips, the cloud companies, the brick and mortars that go into the sector have been handsomely rewarded the last few years. Now we're excited about the migration to who's actually going to benefit from the application of this technology to their business models.
Okay, so before I ask you about that, let me just. The thing is, like, everyone, you dance while the music's on. There's a party going right now in artificial intelligence.
Yes.
And if you have these hyperscalers investing in these data center plans and capex, then that's obviously going to benefit the picks and shovels, in this case, the likes of NVIDIA. And so one company's investment is another company's revenue, as in the case of NVIDIA. If they start to slow down, then the numbers will start to slow down for NVIDIA as well. Can the AI stack at the top level, the AI application stack, the AI application like right at the top, do well in an environment where there's a slowdown going on at capex spending?
Well, that's interesting. I think the way it works is you actually invest upfront to build that infrastructure. So you're seeing a rally, for instance, in names like utilities, right? Utilities never rally. Why are they rallying? They're rallying because there's going to be a surge in demand for energy. There's upgrades that's happening to the electrical grid in places like the U.S., which means that there's a lot of network effects to this AI boom. That being said, so far we're seeing that the spending is not slowing down at all. And a lot of the the infrastructure that goes into building the next application layer has already been done or will continue to be optimized.
What are the sectors, do you think, that are most ripe for AI productivity gains then at an application level?
Right. So as I said, I think that the application layer of AI is where we're most excited today. And there's two different companies within that. So they're the companies that are helping with the migration to the application layer. Those are names like Surge AI, which we think is the undisputed leader within data labeling. Also names like Databricks, which help companies actually do something with all the data that they accumulate. Then there's the companies that will actually apply the migration or benefit from the migration in places like healthcare, financials, industrials. There's a company like Tempest AI, which uses AI for personalized oncology, cardiology, mental care, even real estate companies that are using it to proprietary models for transactions and transaction efficiency.
Yeah, and so from the clients that you speak to, beyond AI, are there any segments of the market that they're excited about right now?
Yeah, I think that, to be honest, you have to look at where there's value in the market, right? Today you have a very perfectly valued market relative to where rates are.
Yeah.
And while we did get our first rate cut, and probably will get one or two more this year, the market is treading water in terms of its earnings yield valuation versus fixed income bonds or safe haven assets. So we do see value in other places like healthcare. We still think financials are poised for a really nice 2026. But we're being careful in terms of what we're buying, especially within growth names.
Yeah, one of the beloved investments for retail this year has been gold as well. Are you still seeing a lot of interest going into gold, and people very bullish even at this point? I haven't spoken to anyone who's bearish on the outlook for gold.
Well, gold is interesting. If you look at its long-term fundamental value and demand, it is massively overvalued. It is one of the most overbought asset classes that we've seen in a very long time. However, there's a lot of things that are propelling that rally that are not fundamental, such as geopolitical, certain countries trying to shift their currencies away from pure US dollar reserve status. And those trends can be very powerful to sustain what we think is a irrational rally. You're also getting really nice yields in fixed income, so you have safe haven assets in corporate bonds, treasuries, tips that frankly actually give you some income while gold does not. Also, I think as inflation tempers slowly, gold will lose a bit of its luster.
Okay, so you're not as outright bullish as everyone else I speak to then? No?
We are not.
Okay, cautious then. Rami, really good to chat to you. Thanks so much for coming on.
Thank you for having me.
Rami Sarafa, CEO of Cordoba Advisory Partners. Now for a look at some of the other stories we're following. The Qatar Investment Authority is partnering with Blue Owl Capital to finance and invest in data centers. The new digital infrastructure platform will launch with more than $3 billion in data center assets, with plans to expand as demand for computing power and data storage accelerates. The Southern Wealth Fund is committing about $1 billion in new equity to the venture, and this initial contribution will be the basis for a permanent capital vehicle to scale globally. Saudi regulators are planning a further expansion of the local debt markets to finance massive construction projects. The Capital Market Authority is introducing new instruments, increasing foreign participation and encouraging more borrowing to boost the kingdom's debt market to 28% of GDP by 2030. Regulators are working to simplify the process of issuing debt and are considering easing tax rules to spur more companies to tap public markets. The Saudi Crown Prince has ordered a rent freeze in the capital of Riyadh for the next 5 years. The freeze took effect on Thursday and affects both residential and commercial properties, with rent for vacant space fixed according to the last price. The move aims to regulate the market and address concerns about surging real estate values and their impact on the cost of living in the capital. And the UAE is in talks with Canada to sign an agreement aimed at doubling bilateral trade. Economy Minister Abdallah bin Tuq al-Mari says the Gulf country wants to double trade with Canada to around $5 billion. The UAE is interested in seeing Canada invest in agri-tech and agribusiness to help the Middle Eastern country reduce its dependence on food imports. And coming up, Guinea's new constitution paves the way for its military leader to run for the office. The opposition calls it a power grab. We'll have more details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumoke in Dubai. Voters in Guinea have approved a new constitution that extends presidential terms to 7 years. The law also allows General Mamadi Doumbouya, the current military leader, to run for president in future elections. For more, Bloomberg's Odier joins us now from Kigali, Rwanda. What does this new constitution mean for Guinea's transition from military rule?
Good morning, Jumana. So it edges them closer to returning back to democracy and also a civilian-led government. This new constitution that was just voted in, what it does is it doesn't bar the junta from vying. And so we could likely see the potential of some of these junta leaders throwing themselves into the political field and trying to vie for some of these political offices. We know that Doumbouya can vie either as an independent candidate or backed by a political party. It also opens up the room for creation of the Senate to be a lawmaking body alongside the National Assembly, and also the development of the National Development Commission, which will oversee the boosting of economic development in the country of Guinea. And this new constitution that has been passed replaces the old constitution that was dissolved after Doumbouya took over power following a coup in September of 2021, where he overthrew the sitting president, Alpha Conde, who was trying to change the constitution, increase his time in office for a third time, and increase the time that he was going to be in office by 6 years. And during this coup, Doumbouya justified it by saying he was trying to save the country from plunging into chaos. And also, one of the other things that he was doing is chastising the government for broken promises. But that is old news. This new constitution has been passed. Over 80% majority of the people came out and voted yes in the constitution. And now what they're waiting for is for the Supreme Court to ratify this result. Though the opposition have called it almost a campaign, saying that this is an attempt to grab power and legitimize a coup d'etat.
Exactly. So, if the end game is actually legitimizing military regimes, is this model going to be used more often, these controlled elections, these constitutional reforms, as a way of sort of consolidating power for these military juntas?
Jumana, this is not a new playbook. It's already in motion and action, particularly in the Western Sahel. We've seen it happen in Gabon. We saw it happen in Chad, where a military leader called for elections, and the Electoral Commission declared him the winner. Though there were big questions surrounding this election, there was crackdown of the opposition. One of the members lost their lives. We've also seen Mali call for elections, but this was put on pause because of the ongoing terror threats. And in Guinea, it could be following the same direction. The coup took place in September of 2021. It's been nearly 4 years and an election had not taken place. Traditionally, how it should happen is a military coup happens, there's a transition government, an election is organized, and they return back to civilian power. That has not happened. And even though Doumbouya, at the beginning of his reign as a coup leader, said he was not going to vie, the door has been opened by the Constitution, and he has not come out to reiterate the stance that he is going to vie. Remember, he's been in power for 4 years, and the Constitution allows 7-year 2 terms. That will be 14, making him be in power for 18 years should he choose to vie. And this is nothing new. It's a trend that is beginning to grow in this region. And for context, it could set precedents. If he decides to vie, it legitimizes the junta, and all the other countries that have had coups in the region could follow suit. We are seeing ECOWAS growing very uncomfortable with this arrangement. They've threatened sanctions. They've put demands on these countries, and maybe elections is just one way to beat the demands by ECOWAS. Rather.
Bloomberg's Odier, thank you so much for the latest. Now for a look at some of the other stories we're following. Mali has suspended its counter-terrorism cooperation with France. The move came after France took similar steps, including expelling Malian diplomats following the arrest of a French envoy in Bamako. Mali accused the arrested French citizen of plotting to destabilize the military leadership. Tensions between the two nations have frayed since Mali's 2020 coup. Botswana is holding an unprecedented diamond auction to raise money as its economy struggles. Diamonds account for 80% of Botswana's export sales and a third of its revenue. However, the global market for diamonds has been hit hard by U.S. tariffs amid competition from lab-grown gems and a decline in Chinese luxury spending. And coming up, Chinese company Baidu says it is road testing autonomous taxis in Dubai. We'll have more on this next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Baidu says its autonomous driving unit was granted a driving trial permit in Dubai. The Chinese company says its Apollo Go's 50-vehicle fleet has been conducting open road testing since August. Apollo Go plans to expand the fleet of driverless vehicles to more than 1,000 over the next 3 years in Dubai. Let's get more from Linda Liu, Bloomberg's China cars reporter, who has been here in Dubai this week. And not just here, but also actually you tested one of these driverless cars.
Yes.
Tell us about it.
Baidu and Odier here in Dubai took some of the media as well as guests around the permitted autonomous driving zones yesterday. So we got to see how Baidu's vehicle really navigated the traffic here in Dubai, the left turns, right turns.
Was it smooth?
It was very smooth. So I hope that, more people in Dubai will get to test this robotaxis once it's, approved for further rollout.
So let's talk about what this means for Baidu. How important is the autonomous vehicle division as part of their overall business?
For Baidu, I think this is one of their key businesses that's going global. Obviously, Baidu is known for being a search engine in China. They also do their own AI models. But robotaxis, I think, is a very exciting business areas where you can see this future-facing technology being applied to everyday lives, where people get to go into a vehicle and see the technology for themselves. So it's a lot of potential for Baidu to bring this technology to the rest of the world.
Yeah, I remember many years ago when I started speaking about Tesla, people said that Tesla is a tech company that makes cars as opposed to a car company that uses tech. And you're seeing it more and more with all of these tech companies venturing into the car space. Have they been trialing these self-driving cars in other parts of the world? Or is there a specific reason that they chose Dubai?
I think they are planning to bring this robotaxis to more and more places in the world, but the Middle East, especially the UAE, as well as Saudi Arabia and Qatar, are actually very friendly regions for these robotaxi companies because the governments have set these very specific goals to transform their transportations into smart and autonomous. For example, Dubai has set the goal to make its trips, 25% of its trips to be smart and autonomous by 2030. So it's very ambitious goals.
Does that ultimately mean, what is the overall economic impact of that? I mean, why is there a focus on autonomous driving? Is it for safety or is it efficiency?
Yeah, I would say it's both. Robotaxis have the potential to be a lot safer than human drivers, given that they're not impacted by conditions like fatigue or some other human factors. And in terms of efficiency, I think for countries like the UAE or Qatar, a lot of the ride-hailing and taxi drivers are guest workers, so it's a factor, maybe
brings down costs.
Yes,
also
that the governments are considering.
Yeah. So good to chat to you. Exciting story to round up the week. Linda Liu, Bloomberg's China cars reporter. Well, I am personally heading to the airport soon. I won't be taking a self-driving car, though. I'm still traditional on that front. But that rounds up our show for this week. Keep an eye out for PCE data in the U.S. later today. It's going to be a big driver for sentiment as we speak about a pullback for Wall Street the last couple of days. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.